All right, so today, if you guys can all see my screen, we have, I thought I'd just briefly give you the agenda. Our agenda today, first of all, there's just going to be a short intro about what who we are, what we've been doing, and why we've been doing it. We're going to go through some of the details of the act that was signed into law last Wednesday, a week ago today. So we're just going to go through basically how it affects construction companies, and we're going to leave out some of the stuff about Medicare and the state governments and that kind of thing. We will then have a short Q&A session where we'll get questions about the act itself and try to answer any questions that we have that you guys have on the act itself. Then we're going to jump in and we're going to show inside of Vista the basic setup. So the basic setup saying, how do we use Vista with current setup to make ourselves compliant with this act, give our employees all the benefits that they are entitled to, and also make sure that we are set up to receive the money back from the on our Form 941 and the FTPS. Then we're going to take a quick accounting interlude and go through how it looks on the balance sheet and on the profit and loss when we set this up this way, and some of the decisions that we've made in our basic setup. We're going to look briefly at the advanced setup and some of the possibilities that we can do inside of Vista if we go further than the basic setup, and the reasons we would do that. We're going to go through showing how you can get help. And finally, we're going to have a longer Q&A session at the end. And at the end, we're going to be fielding questions, again, about the act itself, and then also talking about the other 4 items here, about how we set it up, how we chose to set up in Vista, and we can, take some of the try to field some of those questions there. So definitely today is a Vista oriented day. We're talking about this Coronavirus Response Act and how we can get it done. So I guess we can just jump right in. I am Michael Kelly. I am the president founder of Silvertrex Systems. We're a 10-year-old company. Actually, our anniversary is next week. For 8 of those years, we've been a Viewpoint partner. We implemented Viewpoint for a company local to us here, and then since then we've been part of their various programs. In 2015, we purchased Vista, and we became a Viewpoint customer as well as a Viewpoint partner, and so we could use Vista at our own company. So this isn't just theory for us, we're also having to implement this exact thing that I'm showing you today for our employees as they're affected by COVID-19. We have on the line with us attending this, the Viewpoint product people. They very graciously agreed to watch this presentation. They're not going to be in the presentation itself, but they're going to watch this presentation, and they're going to be we're going to be meeting up afterward to make sure that everything that I say, that I'm not getting anything wrong. One thing is I'm very sensitive to is the fact that this is a new law. Some of you guys have been on CFMA and on some of the Connection Cafe conversations. This isn't something that we want to rush into and get wrong. We do have to, time is of the essence, but we don't want to get this wrong. I definitely want to have everybody, especially the Viewpoint people, but also all of you in the audience, give critical feedback on what I'm presenting today. I don't pretend to know everything. I am trying to do my best to consolidate all what I know about the law and get it into Vista in the best and most efficient way possible. So, at any time, if you guys are seeing something that makes you raise an eyebrow, I would welcome your feedback. I do feel like that what we've done and what we've tested in the last week over the weekend, that we can see that it's working. We've deployed this twice now, and we see that this should work well for all construction companies that are using Vista that are between 50 and 500 employees. We are we will be working to help our various customers, existing customers that have already requested this, get this implemented. And we also are providing after this webinar all of this data, the detail that we're going through, the recording of this webinar itself, but also a PDF how-to guide for all attendees so that you can set it up on your own. Okay, so let's jump into the second one. What is the ACT? Well, first of all, the ACT is titled the Families First Coronavirus Response Act. For those of you that can see my webcam, this was my homework here. This is the Response Act as was passed into law, signed by Trump last Wednesday. It goes into effect no later than 15 days after the passing of this act. That 15 days is April 2nd. There has been various opinions from various people who that say that this means that it can begin to be enforced on April 2nd, but that from the passing of the act, that is last Wednesday, that we can already begin to offer this to our employees. We don't have to wait. For most people, however, this means that time that is being worked this week or time that is off this week, that is paid next week. April 2nd is Thursday, so most of us have Thursday or Friday pay dates. Paid next Thursday or Friday will be subject to this law. So for all intents and purposes, its effective date is April 2nd. That's next Thursday. If you have a pay date on Wednesday, then it might not apply on April 2nd. We do have guidance. That's not true. We do have a statement from the IRS and the Department of Labor and the Department of the Treasury that indicates that there's going to be a 30-day non-enforcement period. So it's likely that as long as you're showing good faith in trying to conform to this, that we will be able to, we won't actually need to conform to this for 30 days. However, many of us are already experiencing the effects on our employees related to COVID-19, and the Act does allow for us to get reimbursed for that sooner if we can get our accounting system set up correctly. So we are able to get it set up. If we're able to get it set up, we can get immediate cash. This does expire on 12/31/2020, and of course, we expect there to be a lot of small changes and more guidance from everyone. The IRS themselves, and I can pull this onto my screen here. The IRS, Treasury, and Labor, this is the announcement that they gave here. And I'll be sending this out for anybody who doesn't have it. This is a news release on the website, on the IRS website, and it talks about a lot of the details and their intended guidance that they're supposed to give. By law, Department of Labor must give some guidance by today. That's what stipulates in the Act, and the IRS has indicated that they're going to as well. Of course, that.
Sorry to interrupt, but it looks like there has been the Department of Labor. It looks like they've bumped the date forward to April 1st.
Okay.
Just perfect. Announced.
Just announced. Perfect. And that's great. That's exactly right. All of what we're going on is essentially yesterday's information, and as all of us know, things are changing quickly. We have the new stimulus package coming down. We don't expect that to change anything here, but of course it could. And then all three departments, Department of Treasury, Department of IRS, and Department of Labor, could change things as we go. And it is our intention to keep all of you updated as we learn and as we get things, new specifics come down. We're going to be talking about what we know, and we're going to be talking about what we don't know, both of which are important today. So the first part of what we're going to be talking about is in the law itself is called the emergency paid sick leave. And this is what's in the act itself is Division E. If you're a glutton for punishment, you can go and read the words there that were written by many lawyers. And Division E talks about the leave itself. So this is sick leave, and this is an expansion to our existing sick leave. In general, there are two separate types of leave that are two categories of leave. One we are calling inside of Vista COVID-19 employee. And there are three categories that fall into this. The first category that falls into this is the stipulation of basically these are the categories that allow our employees to take time off because they're directly affected by COVID-19. They are themselves, in other words. I'm going to read those off to you guys here. The first one is the employee is subject to a federal, state, or local quarantine or isolation order. So, quarantine or isolation order, and is therefore unable to work or telework. Many of us, like I'm here in Washington State, I'm already subject to this here in Washington State. If I was unable to work, then this would apply to me. The second portion of this category, COVID-19 employee, is the employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. So this is where a health provider has asked for someone to self-quarantine. The third is the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. So this is if they're experiencing COVID-19 and they go to the doctor. This can be paid out, must be paid out at full pay with a cap of $511 per day, which roughly is $64 an hour. The second group, second category, which is what we're calling inside of Vista, COVID-19 caretaker. This is the other three categorizations given by the law, and we have number 4. So these are listed in the laws 1 through 6. They're just broken into these two groups. Number 4, the employee is caring for an individual who is subject to an order as described in the above. So if you're caring for an individual, note that does not say caring for a son or daughter. That says caring for an individual that has that is subject to one of the three above. 5 is the employee is caring for a son or daughter of such employee if the school or place of care of the son or daughter has been closed, or the child care provider of such son or daughter is unavailable due to the COVID-19 precautions. So, son or daughter, school, or childcare closure. And number 6 is almost an out for them. Basically, it says, well, I'll read you exactly what it says. The employee is experiencing any other substantially similar conditions specified by the Secretary of Health and Human Services in consultation with the Secretary of Treasury and the Secretary of Labor. That I believe to mean that if Health and Human Services, Treasury, and Secretary of Labor all get together and they say, hey, this also counts, then there may be additional items added at that time. These 3 in this category in general, COVID-19 caretaker, is paid at 2/3 pay with a cap of $200 per day, or roughly $25 an hour. Now, in both cases, it is my understanding that, and I don't see that there would ever be a reason for this, you can always pay more than what is required. In other words, you can choose to pay full pay, even in COVID-19 caretaker case. You can choose to pay full pay, or even if it's higher than 511 per day in the COVID-19 employee case. You can always choose to pay more as a policy internal to you, provided you don't discriminate against any of the protected classes of employees. So these are the 2 sick leave categorizations and that we're going to be setting up in Vista. A few notes on this. First of all, how is this being taxed? Well, we don't know is the first thing. The IRS statement that they made with the Department of Labor and Treasury says employers face no payroll tax liability. That is unclear what that means. There has been a lot of conversation online about whether that means that is it going to be include FUTA, federal unemployment? Are the states going to join in and not charge things like state unemployment for monopolistic states or workers' compensation? What's workers' compensation going to handle? How's they're going to handle this? Generally, this is paid time off, so we would follow the same things that we would do for other paid time off. We also, there has been rumors, and I can say at this point that they're only rumors, that they're also going to waive the employee federal taxes, so on this particular pay, but none of that is clear at this time. The only thing that is clear is from this statement that says employers face no payroll tax liability. When we set up Vista, we have taken the conservative approach to mean that that this leave is not subject to FICA Social Security for an employer and FICA Medicare for an employer, and that all other taxes that would normally pertain to paid time off still pertain. That means that that the employee will see all of their taxes come out of their side, and it will mean that all of the other state taxes, et cetera, will be applied until states and federal government gives additional guidance, which we expect. So that means 1, FICA, Social Security, and FICA, Medicare do not apply. And until further notice, it's embarrassing that I don't even know how to spell. Further notice, all else does. If once we learn about those particular taxes, we will let everybody know. What I'm going to be going through today is obviously just what I said here. Next section is how much do they get? Well, they get 80 hours. And there has been some questions about this, if we're paying at 2/3 pay for the caretaker and they use their 2 weeks and then they get sick and themselves and they would fall under COVID-19 employee category, can they then go back and get full pay? And I believe the law states that you can use 80 hours for one or the other, whichever comes first. So if they've already used their caretaker pay, then they would have used it up at 2/3 pay and they would no longer be eligible. It's 80 hours across all 6 individual categories, all of these 6 here, and not specified to 40 hours each or anything like that. So what this means is that for 2 weeks, a total of 2 weeks, that we have, so if we say week 1 and week 2, that they can either take their time at full pay under the employee category, or we can restrict their pay to 2/3 for the caretaker category, but these are mutually exclusive. Okay, so the next section is the expansion to the emergency family and medical leave. So what does this mean? Expansion of the family FMLA, Federal Family Medical Leave Act, the existing Family Medical Leave Act, which specifies how much that you must give and the fact that you have to give the people their jobs back, etc. This is Division C inside of the Coronavirus Response Act. Expansion of the FMLA allows for an additional 10 weeks off. So an additional 10 weeks of paid time off. More specifically, it allows for 12 weeks with the first 2 unpaid. And don't let that confuse you. The first 2 unpaid, because of, and we'll get into this in a bit, they can actually be paid under the sick leave expansion that we talked about before. So this is an additional 10 weeks paid time off. How much? This is all at 2/3 pay. So on my thing up above here, you can see we would have week 2, week 3, all the way through week 10, and the expansion to the family leaves allows for week 3 through, I'm sorry, not 10, week 3 through 12 to be continued to be paid at 2/3 pay. So this is the expansion to the family leave. At 2/3 pay. And what does this mean? How can people apply for this? Essentially, this is only for family leave for people who are caring for their family that are affected by this. So one of the things is if the school closure, for example, which is nearly nationwide, if it's not completely nationwide at this point, is if the school closure forces you to not be able to work or telework, then you would fall into this category, and you have the family leave for the additional 10 weeks, 12 weeks with the first 2 being unpaid under this portion. The one note on this 2/3 pay here, this cannot be less than, no less than minimum wage, which, so that it might be a restriction in some cases to pay people 2/3 wage. Now, there also is a clause that this cannot be more than $200 per day. So in other words, if you have a highly compensated employee, rather than paying them 2/3, you can pay them just the $200 per day. This is also only for the hours that the employee would normally be scheduled to work. So normal hours only. For full-time employees, that's 40 hours. But there is special rules about how much they actually worked, and it says to look at the history, etc. But for purposes of today's discussion, if they're a part-time worker, if they work 20 hours a week, then they would get 20 hours a week of pay. Okay, and then we get so this so far what we've talked about is the sick leave requirements, Division E, and the expansion of FMLA, Division C. This is the employer requirements. This is something that we must do in order to help our employees. The next section here is how the federal government is helping the businesses to get this. This is the tax credit section of the law. And this is in Division G. Actually, before I get into that, I do want to clarify one thing. On Division C and Division E, I am repeating back to you what I understand of this law, and I also am implementing Vista accordingly. Please consult with HR professionals. Please consult with your lawyers before generating policies based on what I say today. I'm talking about this to help you get your accounting system set up. I'm not a lawyer, I'm not a CPA, and all of those kind of things that I need to do. I would hate for someone to get into trouble with the Department of Labor because of what was written on my whiteboard here. I do believe this to be true. If any of you guys see that something that I have misrepresented, I would love to hear it, and I will definitely correct myself after the fact. Little disclaimer there. The fine print, right? We're supposed to have the fine print. Okay, the tax credit. This is kind of the fun part. Tax credit is how we're going to get the money back from the federal government and how they're going to give it to us. This is Division G, and it goes into a lot of information. First of all, how much do we get back? Well, for the sick leave, for COVID, what I called above COVID-19 employee, we get reimbursed up to $511 per day, or $5,110 in the aggregate, which is also what they allow you to cap your employees' wages above. You cannot receive more back than $511 per day. For the second category of sick time, what we call COVID-19 caretaker, you can get $200 back per day, or $2,000 in the aggregate. For the paid family leave expanded, as listed in Division G, so the paid family leave, you can get $200 per day for 10 weeks, or $2,000, I'm sorry, $10,000 in the aggregate. Note that as before, these two are mutually exclusive. However, this is in addition to. The paid family leave, the sick leave, especially as it pertains to B and C, you'll recall that these were paid out at 2/3 pay. It is possible to pay more to your employee than you will be getting reimbursed. That is a employer policy that can be chosen. So as long as you're paying them more than minimum wage, you can pay them whatever you want, as long as it's 2/3 of their pay or more. However, you must limit the amount that you're requesting back in tax credits on those two. So for example, you could have an employee that's getting paid $30 an hour, $25 more than the $200 per day, and they get paid that full amount, and then you receive back only the $200 from the federal government. All right, what else counts? They've added a provision specifically for employer medical costs. And these employer medical costs are costs that can be directly apportioned to the employee's wages. So this is what we would set up as a liability code. And generally speaking, although it's set up in different ways and for different companies, this is when it's easily apportioned if you guys have your liability set up as $1 per hour. If it's set up as a rate per month or anything like that, then there will be a little bit different way of counting that. The employer medical costs increase the amount that you get back. So in other words, that you could get the total 5110 for an employee, plus you could get the medical costs. You could also have on the paid family leave, you could get the total $10,000 in aggregate for somebody, plus you could get the medical costs back. There has been no guidance yet as to which types of plans are provided on that healthcare, which, so do all types count? Do things like AFLAC count, that kind of thing? It's likely not. There hasn't been any guidance that I've seen, I should say, on that note. There is specified laws on what, in the law, there is some specifications on what kind of healthcare is cost. But generally speaking, when we're setting this up, we're taking the conservative approach that the standard healthcare, standard liability counts. There is no provision in there for reducing the employee's portion of the medical costs, only for the employer for the reimbursement. How do we get this back? Well, this part is actually one of the best parts of the statement released by the IRS. This is coming via your EFTPS payment. So it's going to be a reduction immediately on your EFTPS payment. And in their statement, they've promised that if your reduction is greater than what you would pay for your normal withholding employee and employer FICA, FICA Social Security, and FICA Medicare, that they will expedite refunds and they will get you a check within 2 weeks. So we immediately get the money back by not paying the burden on this like we normally would, 1 day or 3 days later, depending on how we're set up. And then if we happen to have a reduction that's greater than that, then we'll actually get a check back quickly. Right now, the EFTPS, as of this morning, I double checked, the EFTPS has not modified their website. And so our recommendation is to take in proportion, a proportion amount out of withholding, Social Security, and Medicare when you file that. We expect that there will be guidance from the IRS to say whether or not this is accurate. The last thing, we expect that the Form 941 itself will change. However, we don't expect a change for first quarter. So we only expect a change for second quarter EFTPS, or sorry, I'm sorry, 941. Right now, there's a section, for example, you guys know this better than I do, that 941 has the small business tax credit on there. And the 941 will likely have a section where we'll be able to show the total amount that we were, in the second quarter, and then third quarter, fourth quarter, et cetera, for COVID-19 related tax credits. We expect that, and at that time, we will, be all of us will be working with Atrix, and Atrix will have that in there. What we will have to be able to do is provide on that 941, with guidance from the IRS and help from Viewpoint, we'll have to understand how we file our things like our Schedule B, so that we don't get hit by, with late payments when we, because of the credits, et cetera. Okay, so that's the tax credit, and as we understand it, we're going to be talking about that for sure. Finally, one last thing before we jump into Vista proper. Unions. The law does provide for unions to take care of this for the union employees. So specifically, it says that an employer which is signatory to a multi-employee collective bargaining agreement, the union, can fulfill its obligations under this act via what the union provides. Now, what is unclear at this time is how that actually happens. It is likely but unknown that the employer, if the union is taking care of the employees and not the employer directly, that there will be some sort of payment made to the union, which will then be able to be reimbursed from the IRS. It doesn't seem like the union will be getting a reimbursement from the IRS directly. That seems unlikely. It's also possible for many unions and many union contractors that they can choose to comply with this law themselves. It's very unclear. Despite doing everything I could to find additional clarity on this, I couldn't find anything. I'm hoping that when the Department of Labor comes out with their official statement, that they will give additional clarification there. So if you're a union contractor, you should be talking to your unions. You should also, and if you're just going to be providing this directly, and that isn't violating any of the tenets of your particular union agreement, which every union can have a little bit different there. Then as long as you're providing it directly, you should be exactly the same as everyone else, as anyone who's a non-union employer rather. Okay, so let's take the next 10 minutes or so. Let's see here, 7 minutes or so, and see if there's any questions that you guys have asked during this time that I can answer about the law itself. Anything come in, Jenna, that
Yeah, I've got a couple questions up on the board right now. One of them is if there's employees who have been impacted before the date, so you've got a lot of folks who their schools have been shut down. Do we have an idea of if people have already missed work before this goes into effect, if it covers it at all?
Yes, to a certain extent. I expect further and specific guidance, but the general consensus has been that for time after the law was signed into effect, which would be the 18th of March, on that all the times after the 18th of March, from the 18th of March on, which is when it was signed, would be covered retroactively, or not retroactively. It would be covered from the 18th on, even though the law isn't going to be enforced until April 2nd. That's what I understand at this time. However, the law does not have any provision for time missed prior to when it was signed assigned. So no time prior to that. Good question.
All
Any other
right.
questions?
There's one clarification that came in from Cindy. It looks like the DOL may be allowing people to possibly reclaim over 40 hours a week if that's part of the employer's or the employee's regular schedule.
Okay, that's good. That's good
So,
clarification. And Cindy, if you can shoot that over where you read that, that'd be great. That would make sense. It does. We do have a per day limit, so possibly, we have the $200 per day and the $511 per day limit, and I believe those would still apply, but they could claim more hours than that if they were being paid less than that rate per hour.
and a question from Tim Summers. It's do we know if the what the FMLA minimum wage is? Is there any idea of whether it's federal or state or even local minimums?
They reference the both, and they say that you must be more than the federal and more than the state minimum wages. So you have to follow state minimum wage if it's higher. That's my understanding.
Okay. And then a question from Jennifer Vizcara. Is the employer responsible for the wages of FMLA, or is this going to be paid family leave that the employee applies for?
The employer is responsible for the 10 weeks extra. So if I scroll up here for this area under the red here, the employer is responsible for that. In many states have paid family leave. From all indications, this is in addition to what the states are already providing. So this is responsibility of the employer at the federal level. That has been a lot of conversation about that. How does this interact with state law? There's been no guidance that I've seen for Washington State, which is where I live. And I'm guessing that the individual states that have implemented paid family medical leave will have varying conclusions about this. But at this time, my understanding and what the law says is that the employer is responsible for this 2/3 pay, not the state governments. And please send me anything that you guys find about the various 50 states, if anything that we find out contradicts that, and I'm going to try to be aggregating that and sending it out.
And we'll be doing that via email?
That's right, yep.
Okay.
Any other questions?
Got Pat Flynn's given some real good feedback. It looks like, and Pat, if you could maybe send over where you got this from. It looks like there may be some provisions that if contractors are having to temporarily reduce employees' hours, that they may be able to pay the balance of the hours with sick pay than FMLA if they're in a state with a stay-at-home order instead of laying them off. But it sounds like that should definitely be put out to the attorneys. But if that is the case, that'd be an awesome tool.
Cool. Yeah, and if you can send over sources on that, then I can aggregate them and send them to the whole group. That'd be great.
All right, and then something that comes in from Bridget, is there any direction on if the employee has varied wages? Is there like a look back period to determine pay? This may especially hit people who are doing prevailing wage jobs.
Yeah, there's nothing in the agreement that talks about varied wages specifically. Let's see here. I may need to get back to you on that, Bridget. It talks about their regular rate of pay. So if you're a prevailing wage contractor, generally you have a private rate of pay that's established, and that would be their regular rate of pay. If they're working piecework, however, I don't know how that would work, or if they're always prevailing wage and they're always varying, I don't know. What we'll do is we'll find out as best we can, if we can find any sources on that or if we get any additional clarification. At this time, it just says a regular rate of pay that as far as I know. Good question.
And then from Gary Gilmore is, do we know if the Emergency Family Medical Leave Act is limited to care for a child and not other family members? There's a couple variations of this, of the question coming up.
Sure. So the sick leave requirement says an individual who's affected by coronavirus, just an individual, or a son or daughter who is off school. So that's the sick leave. That's the first 2 weeks. The family leave is for an eligible child. Now, they have a definition of the eligible child in the FMLA, and I believe that that if I understood it right, that the eligible child, so that additional 10 weeks essentially, is for anybody who is in your care. So it's a little bit less restricted than that 10 weeks, but it is that eligible child. Let's see here. There is some provision in Division C for that, and I would recommend reading that in the law. Division C is the Emergency Family and Medical Leave Expansion, and basically the if your son or daughter or your eligible child has because of the closure of a school or because of their child care place is closed, that's where you get the additional 10 weeks, and you're unable to work because of that.
All right.
Okay, is that
And then
it?
is there any reimbursement of workers' comp paid on wages that we know of?
There's nothing specified on that. The only thing that's specified is the medical, the cost of medical. At this time, my belief is that the workers, that if your vacation time or your paid time off, your general paid time off is subject to workers' comp wages, that this would be as well, subject to workers' comp costs. Then this would be too. Every provider in the private states and the monopolistic states will have slightly different rules, but you would follow the same rules that you would follow for vacation or other PTO. That's how we set it up inside of Vista currently. Okay. Well, maybe we should jump into Vista proper here, and we can run through this. Let's switch my screen here. Okay. Jenna, can you see my screen? Because if you can, everyone should be able to.
Looks good from here. If you can make it a little bit bigger, it's a little fuzzy right now.
Okay. I'll do my best. Hopefully we can. Of course, there's not a lot we can do inside to here, but did that work? Did that do anything?
Not too much. Can you make that the overall window a little bit bigger by chance?
I think that it'll have to be done on your end. If you guys are having a tough time
Okay.
seeing my screen, then you should be able to make my screen full screen on your side.
Oh, it looks like if we shrink or minimize that webcam, it gets bigger.
Okay, perfect. So if you can minimize that.
Thanks to all the folks in questions. It looks like you can also move that gray bar up to minimize it.
Okay, perfect. My view is a little bit different, so. Okay, all right, so what I'm doing here is I have open on my other screen the PDF that I've put together that I'm going to be sending out to you guys, and I'm just going to go through the steps that I took to set these things up. The guide that I, it's a that I'll be sending out. It basically has three parts. First, we're going to be doing the setup inside of Vista for the paid sick leave expansion. Those are the two categories, employee and caretaker. And then we're going to be talking about the setup for the emergency family and medical leave expansion. And then we're going to be using the existing reports to how we're going to pay our EFTPS deposit and take the credit. So I'll jump straight in. First of all, the setup for the emergency paid sick leave. What we talked about is those two categories. Category one being COVID-19 employee. We need to do a few things here when we're setting these up. We're responsible to track the hours. We're also responsible for tracking the earnings, and we're responsible for tracking the amount of the credit. And those three things are somewhat independent in the system. So the first thing that we've done is we've set up a new earnings code. So inside of my example excavating Inc. here, I can come into the earnings code, and I set up a new earnings. You can see I have all of my earnings codes that are normally in here, all kind of reimbursements, sick, PTO, etc. And now at the very end, I've added a few new earnings codes. This first one I called COVID-19 employee. This is a standard rate per hour, and I checked all of the boxes, including that it's a true earnings and we're tracking the hours for ACA, etc. And I called this earnings type 5, which in my case is my standard salaries and wages. So it's my standard salaries and wages. This means that via the payroll department master, that it's going to be going to this is going to be going to wherever they get paid. In some cases, you may choose to, instead of put in salaries and wages, you may choose to have this earnings type 15 PTO, if that directs to a different place on your balance sheet, on your profit and loss. Most of the time, however, PTO is a reduction of a liability, and therefore would be inappropriate for this because there is no accrued liability associated with COVID-19 employee. So I'm going to leave this as salaries and wages for now. JC cost type must be filled in. I've put it as labor. This shouldn't be used on a job in most cases, although sometimes I know that you guys will have jobs set up for things like overhead or shop, and that directs the expense in a different way. Therefore, you'll have to have a cost type set up there. Then after I've got my the earnings code itself set up here, COVID-19 employee, I'm going to go and set up the deduction and liability codes. What I did here was I just clicked this button, add deductions and liabilities, and it added all of the deductions liabilities. And then I went through and I took out the things that didn't matter. So for example, what I need to do is I need to say that at this time, FICA Social Security employer and FICA Social Security or FICA Medicare employer, we are not subject. We're not subject to this, or not subject to this earnings code. So I can take those out. Other things that we need to think about are should follow roughly how you guys have your PTO set up. Definitely, you need to review your deductions liabilities here. You need to think about things like the 401k contributions on here and the 401k matches, and what your policies are regarding those. Do you get them? Do they normally get them for vacation time? Do they normally get them for sick time? And you should a safe way to do it is to follow the same there. All of the state income taxes are subject. Plus, we have the FICA Social Security and et cetera set up there. Now, our after we get the COVID-19 employees set up, we're going to set up what we called Earn Code 101, COVID-19 caretaker. And this is a separate earn code specifically for the wages when they're caring for, in those first 2 weeks when they're caring for a son or a daughter or another individual that's affected by coronavirus. If you're choosing to pay this at full rate, you leave this at 1. If you're choosing to pay this at less, you uncheck include in overtime calculations and put in 6667 here. This will default their rate per hour on the time card entry to 2/3 of their normal rate of pay. Like we talked about earlier, we can decide to pay at full wages here, which I'll leave that here for now. We can pay at full wages, and then we only are reimbursed up to the $200. Similarly, on the deductions liabilities tab, we would go down and make sure that we've deleted out the anything that is not, well, we'd add the deductions liabilities, we delete out any of the basis codes that are not applicable here. So in my case, I've already deleted out the FICA Social Security employer, FICA Medicare employer. And hopefully we'll be able to do some of the same things with FUTA and state unemployment as we hear more. So I've created the two earnings codes and I've checked the basis codes of those. Now we need to set that tracks the earnings, and it will track on the payroll accumulations. It'll go to our W-2s. It'll be on our 941 reports. All that kind of stuff will show up based on us setting up the earnings codes here correctly. The next thing we need to do is we need to set up a liability. Now, this is an interesting thing because it's not actually a liability. This is an asset. So what we've done here is we've set up a sick leave liability. Let me switch to, yeah, this will work here. Sick leave liability. No, I'm sorry. We need to set up the COVID-19 employee, which is 704. So we're going to just come in, set this up, COVID-19 employee, and we're going to call this a liability, and we have to set up a new liability type. So what we've done is we've set up a liability type COVID-19 reimbursement. And after this little section, I'm going to go through how this actually looks on the accounting side of things. But we have to set up this liability type in order to direct where the other side of the equation is going. In our case, the credit is going to go. Now, normally a liability will go to a liability account, typically one that starts with a 2. In our case, however, we're going to put this to a current asset. So because this isn't actually a liability, we're going to get a credit back for this money from the federal government. We're going to call this our rate of gross, and we're going to put in the rate amount as -1. So what this is going to do is calculate a negative liability, and it's going to put it to it's going to debit in this case because it's a negative. It's going to debit our COVID-19 reimbursable, and through our liability types, which we have to set up on the payroll department masters, it's going to credit something else. We recommend crediting in other income. There is specific language in the law of denial of double benefit. Basically, the credit must increase your gross income for tax purposes, and I would guess for GAAP purposes as well, although the law doesn't specify the GAAP rules. So in our case, we've set up liability type 20 to go to our miscellaneous income in our other income category down in the 900s. We can set a subject amount limit here. So our subject amount limit for COVID employee, we can limit the amount that they can take here to the amount allowed by law. This does change depending on your payroll cycle. Silvertrek, we're a 2-week pay cycle, in which case the law allows for 5110, and so we just put it in there at 5110. If you're a weekly payer, it's exactly half that to 555. And you do put this limit as a negative there. So example, excavation is a negative, and we can save that. Oh, I didn't put in the limit period, so it warned me this is a pay period limit. And like I said, this is going to be on that PDF that I'll be sending out. Now the basis codes that we put in is real simple. We put in a single earnings code, COVID-19 employee. So the COVID-19 employee, we're going to take it, we're going to multiply it by -1, we're going to put it over there. Okay. Then we're going to go in and set up 705 in our side, which is going to be the COVID-19 caretaker. We'll set up the liability code. Liability type is going to be 20, just like we had before. Again, I chose that. You guys could choose whatever you wanted. Our GL account is going to be 120. We're going to go to the same current asset account, rate of gross, -1. Subject amount limit in this case, it's either going to be $2,000 if you're a biweekly like Silvertrek is, or $1,000 if you're a weekly. And you still need to have the pay period there, just like last time. Basis code here, we're going to delete. Looks like there was something else set up here prior, but we have the earnings code, and we're going to grab earnings code COVID-19 caretaker in this case. Save that. Okay, so we've now accounted for the liability tracking the credit on as we process payroll. Next, and I actually didn't follow my own instructions here. On 704 and 705, we would want this to be, just to make sure that it gets calculated, we've chosen to put it in federal withholding rather than in any or on employee or whatever. There's, as long as it gets captured all the time, then it's okay. We have, so I'm going to put that on 704 and 705. And if we use the withholding codes here, just remember, and this is in the PDF, that we have to go to PR Federal Info, and we have to add 704 and 705 to here in order for it to calculate when we do the employee pay sequence control. Otherwise, it'll ignore this, both of those. Okay, our leave codes. So we've tracked the earnings for 941s and W-2s and all that good stuff. Now we just have to, and we've tracked the liability, which is the negative liability, our current asset, how much we're going to get back from the government. Now we just need to track our leave. And so we're going to set up a new leave code. And we have a leave code here called sick COVID-19. Now, like I mentioned in the whiteboard session, this is 80 hours no matter what they take. So we only have to have one leave code for both categories. I've called this sick C19. Put it in for 80 hours. It resets yearly. The frequency code that I used in this case was O for one time because I get it once. And at this point, it expires in December 31st, at which point we'll do that. But we're just going to put it in at 80 hours. It's available to them. You guys can choose whether or not you are going to show that on the pay stub or not. And then we want to change this to a not allowed. They're not allowed to take more leave than they have available on this code. They would, after they run out of this, they should be falling under your standard PTO. That is one note. This does come first. You must pay this out first prior to them getting their other vacation or PTO time. Then we're going to come to our employee leave and we're going to initialize our employees. So I grab my two different groups. I have hourly and salary here, for example, excavating. And so what I've done is I've made everybody eligible back to 3/18/20. That was the day that this was signed. And I grabbed all active employees and I initialized it. I did that for both hourly and salary. I hit initialize, and everybody popped in here. That is here. That is in this company and active. So I've set up the leave code for the sick leave. I've initialized the employees. And the final thing that we have to do in order to have this show up in their pay stubs to say, hey, this is available for you if you need it, is we have to come into auto leave accrual and usage, create a new batch, and we're going to update the fixed accruals. So we're going to grab the accrual date. I'll just grab 3/19/20, which is the day after. We grab the leave code here, and we can put a description if we like, and we update this. This will create a batch and accrue this. So one note here, before we actually accrue this, right now we've given everybody 80 hours. According to the law, they only get the number of hours that they typically work. So in this case, everybody's full-time, and so it doesn't matter. If we need to change that, then we have to change their fixed accrual standard amount by the amount that they have. Of course, we always recommend that in the employee header that you have their hours per week set up here in the additional info tab, so you can look at the weekly hours if they're in here. So we would just come in here, make sure that this says 40 hours per week, et cetera, and make sure that that's just set up correctly. If they're a 40-hour per week employee, they get 80 hours or 2 weeks worth. If they're 20 hours, then you have to come in, double click on the employee, and change the amount to 20 hours if they're 10 hours per week, or 40 hours if they're 20 hours per week, et cetera, before you do the auto accrual. So go back to here, go payroll programs accrual, auto leave accrual, and we'll run through that here. And then everybody gets their 80 hours. If we go into Carlton Buy here, we can see that I've run that and he has 80 hours available to him. The accrual usage info tab, what we have to do basically is put in the earn codes that pertain. In this case, they're both COVID-19 employee, and it's usage at a rate of 1, and COVID-19 employee usage at a rate of 1. So both types count towards their 80 limit. Once we get the leave code set up, we are ready to go. We can run through and we just put their earnings codes in and everything else works for us. Briefly then, and I'm gonna go through this fairly quickly as we don't have a lot of time left and I'd like to leave time for questions. We're gonna do the same thing in the same order for the emergency family medical leave. So again, starting with the earnings codes, we're going to go to put in what we've called COVID-19 paid leave expanded, put it in at 2/3 wages. We're going to add the deductions liabilities, delete them out, delete 501 and 502 as necessary. Then we're going to go into the liabilities. I realize I'm going fast, and that's why we're sending this PDF out later and we're recording this. We're going to go into the PR deduction liabilities. We're going to set up a third liability at this point, 706 in our case, paid leave expanded. Again, -1 and -1,000, as this is a weekly employer. And we're going to set this earnings code that we just set up as the basis code here. Same liability type, same GL account that we're for the current assets. Okay, then the leave, we have to have a separate leave code here. So we did set up a separate leave code for the family. So this is family C19, family leave. We get 400 hours. And we recommend that rather than initializing this for everybody, that you initialize the employees as they request this time. So that you make this known as a policy, but you don't show all the 400 hours in their pay stubs, and you add it to those employees. So you add those employees manually in here, and they're fixed accruals as necessary when they request the time off. The reason for that is that many employees won't ever fall under this particular part of the act, and so it might not make sense to initialize everybody at once. Of course, that's up to you if you choose to do it that way. Okay, finally, how do we use the standard reports to calculate our tax owed? Well, there's three things that we need to do. First of all, we have to run our standard federal tax deposit liability report. This is what we run on a weekly basis to calculate how much we owe on EFTPS. That's the first thing we do. Second, we can run the tax report, PR tax report. And on the PR tax report, it allows us to choose a deduction or liability. In our case, we put them all in order, so we can grab 704 through 706, and we can run this for a particular month. Make sure you're showing the details, and you can calculate out the dollar amount that you can take as a credit on 704 and 706. Third, you run it for your medical expenses, medical insurance employer, medical insurance owner, as are the two that we have in this particular setup. So 205, and we're going to subtract that out as well. So we calculate using standard reports, our federal tax deposit liability report, plus our PR tax report for the new liabilities, and our federal tax report, or the PR tax report for our medical, and we'll be able to calculate the amount that we owe right now, and we'll be able to take that credit right now, immediate cash benefit to our companies. Now, there is a couple of limitations to the standard setup. First of all, because there has to be two liabilities set up, we can't set up the medicals as basis codes so that we're not accruing the medical onto that current asset. It shouldn't be a problem. You can still take the credit using that tax report. Second, the standard liabilities right now, it makes it difficult to look at things like minimum wage and make sure you're above minimum wage. That will have to be carefully monitored by your payroll team. And then also, you need to be careful when you're paying 100% of wages on the earned code, but you're limiting it to 2/3 wages, or the $200 per day on the liability. Third, the leave codes for part-time employees must be manually changed. So we've in those three things are slight limitations that you guys will need to think about and work through as you're implementing this. Talk them through with the accounting team. Talk through your liability codes, etc. We have, as in anticipation of people asking for additional help, we have created a couple of things. One is we created a PR tax deposit liability report with all of those things taken into account. And we've created, so this is on our test system here, but in the, for the liability codes, we created a custom routine for that calculates and takes into account those things that I talked about, like minimum wage, talked about the 100% wages and limiting it out. This does take a custom routine. It's not necessary, but it does take out all of the manual work of doing this, using this second rate amount, etc. We have on our side, we've also made it a little bit simpler to install these three things, get this report, this custom report out to you, and get the routine if you guys would like to have additional help from us. The tax report, once you run it, looks like this. Basically, the tax deposit liability shows us our paid date with the federal withholding, FICA, Medicare. This would be your standard. And then it shows how much credit we have available, and it splits that credit out based on a weighted average of the three categories. So it allows us to report on the EFTPS website to reduce our total deposit by the amount of our credit. So you can see here we ran a test payroll where we had a $200 credit, and our deposit would have been $587 and is now $387. So this is just a crystal report that we created to look at those liability codes. So for those of you guys that will be setting this up yourselves, I'm going to be sending out this PDF, and you guys can look through that. Hopefully you'll be able to make sense of what I've put together. I apologize if in advance if there's any typos or misspellings. Um, we've been trying to get this out as quickly as possible, and I'm going to be updating it as we learn more. I'm also going to be publishing this webinar and the help to our website, help.silvertrek.net, so that we can get this and have it updated here. This is just our thing here. We are working with Gary and Greg over at Viewpoint to get this into their hands so that their support staff also has this. After we reviewed our procedure with them on Monday, they requested if they could seed ours, and so that we're all talking the same language, which we're very eager to do. Also, if we've been fairly swamped with requests for people to help, we want to help everybody we can. We did set up a page right on our website, silvertrek.net. You'll find it by there's a banner at the top. If you would like to have us help you set that up, or you're interested in the custom report and custom routine, put that in there. In order to make this easy, we're just charging $10 per active employee. So if you have 200 employees, we're charging you $2,000 for all of the install and the custom reports. We're charging, and all of the help of getting it set up, just a consultation and getting it going, and supporting you as the things change. So if you're interested, that is there. That we are hoping to be able to help out as many people as we can, but we want to mainly get it so that you guys can do it on your own, and we'd be just happy to help if we can. I think that now I took almost all of the time. We have 8 minutes left, but I'd like to turn it over to you, Jenna. I'm sure that there's people with burning questions, and maybe I can answer some of them before we go. Or perhaps I said something wrong, or perhaps somebody sees that I'm doing something incorrectly inside of Vista, which I would be more than happy to field as well. Anything good, Jenna?
There's all sorts of good stuff. I don't think we're gonna have time to get to all of it though, unfortunately.
That's a bummer. Maybe what we can do is we can use the next 8 minutes to answer as many as we can, and then people who want to stick around can stick around for additional questions.
All right, sounds good. Got a couple folks wanting to kind of take a look at the PDF. Are we planning on getting that out does that include the reports, the standard reports, as well as kind of the manual processes documented so they can follow that?
Yes, it does. It's the basic setup is what we have documented, and we should be able to get that out to everybody by the end of the day today. I have it complete. In fact, that's what I was following. Like I said, here's the Word document. I can pull it up on my screen. That's what I was following in order to make sure I wasn't missing anything here. And so, here's some details about the act. There's some screenshots about how to set things up, etc., how to set up your leave codes, how to initialize, etc. So there's a small amount of cleanup needed on this, but only a small amount. And then we'll send that out hopefully by the end of the day today.
Okay. And another question is why we're setting up the earnings code to not calculate FICA and Medicare if that cost is a deduction. Don't you need to know how much it is so you can deduct it out?
Let's see. So if the FICA is a deduction, say that again. Maybe read the question one more time.
It's why are we setting up the earnings code to not calculate the FICA and I'm guessing this is Medicare. If that cost is a deduction, don't we need to know how much it is so that it can be deducted?
Sure. No, that's a really good question, and I think I can explain that best with a whiteboard. Everybody at Tapany is surprised at this point. Let's go to here, and I'm just going to. Can you see my whiteboard here, Jenna?
Yeah.
Okay. So we're going to have. Let's just say that we have 5 employees and 5 employees that are working, and they're going to have. So on this axis we have dollar amounts, and on this axis we have employee 1, 2, 3, 4, and these 4 employees are all working. And then we have the burden on top of that, which includes, but is not limited to, the FICA, Social Security, and FICA Medicare that the employer pays, right? And so this amount here is the gross, I'm sorry, not the gross, this is the total cost, of employment. What we have here is our gross, and then we also have everything that gets deducted from the employee's paycheck, which includes federal withholding, FICA, and Social Security, and this is their net, right? So we have all of this. So we take these four amounts, this right here, and this right here, and this right here, and we say this is all something that we're going to pay via EFTPS. And we owe that immediately. However, employee number 5 has pay related to this coronavirus. So we have employee number 5 who doesn't work, but gets paid under the sick leave law for 40 hours, and they get paid their normal rate of pay. Let's just say it's the employee portion. And they also have their standard deductions, which means that they get paid their net pay here under this new law. They're not working, but they're covered under this new law. If those earnings codes, since we took off the basis codes for the employer portion, normally we would calculate our employer burden on top of that. However, we don't have to here. They're waiving that requirement, and they may be waiving more requirements. And so we have to take this amount, where's my gray, only, and add it to our EFTPS. Then we get to take this full dollar amount, add in medical, and we get to subtract that from here. Our full EFTPS minus this amount here, and then we get our reduced payment. So this is we don't have to calculate a liability on this. This is unnecessary, and we're not going to be taxed on that per the current statement issued by the IRS. Hope that clears that up. Next question.
Next question is from Trina. It's since the health insurance portion of the tax credit can't be part of the liability accrual, do we need to track it separately on the P&L?
Read that one more time. Make sure I understand it.
So the question is, since the health insurance portion of the tax credit cannot be part of the liability accrual, do we need to track it separately on the P&L?
Yeah, that's a good question, and the answer is no. You can, when you're recording your EFTPS deposit, and I'm just going to do a quick T chart here. You're going to basically hit 3 codes under the basic setup. Under the advanced setup, if you're using that, then it would be a little bit different. But what I set it up was a current asset account for 120. This would be the gross wages going here as gross wages going there. We have our all of our current liabilities or payroll liabilities are going to be some kind of 200 or 2000 account, right? And then we're going to have an expense account where the medical expense normally hits. Let's just say it's an indirect account at 6,000. And when you record your federal deposit liability, you're going to say, well, in my little example I can pull up here, this is off of this, you can see that I had 587 in federal payments, and I had a $200 credit total. So I would have relieving my liability of 587 is a credit there. I would have, let's just say 150, which is relieving my current liability, and I would have a $50. This doesn't all add up, does it? Yeah, this all works. We have a $50 reduction to an expense on our P&L for the health insurance portion only, And then we have, of course, our cash account, which gets the final reduction of the 387. I just talked accounting in a webinar with a bunch of people. I hope that I didn't lose everybody because I don't even have my pocket protector on. Go ahead, Jenna.
All right. So, question from Elisa: is setting up leave codes necessary if you want to track the 80 hours of 10 weeks separately?
Yes, it's necessary if you're going to set. It's necessary because they have two separate limits. We have one, the sick leave is restricted to 80 hours of what the employee can take. And the expansion to the family medical leave is restricted to 400 hours, or the equivalent of 10 weeks. So they have two separate restrictions, and so if we're going to track the hours per employee, we have to have two separate leave codes. It does look like we're at 10:30 here, Pacific time. So I realize that some of you guys have other obligations you have to get to. Thank you for coming. I'm going to continue additional Q&A after this time. It does look like we have plenty more questions to answer, and I'd be happy to answer those now. I'll be sending out the PDF and a link to this recording after this, and I hope this was helpful, and I look forward to getting additional questions. Feel free, and if call us and email us at any time, we'll do our best to get back to you in a timely manner, so that we can help as many people as possible. I hope you guys are all staying safe, and I hope that we can all help our employees receive pay during this time of uncertainty. It's certainly a lot of anxiety, and I understand that it's a very serious thing for a lot of you. So thank you all for coming. I appreciate it, and feel free and stick around as Jenna continues to ask me questions. Okay, go ahead, Jenna.
All right. So a question from Bonnie: how do we take the health insurance credit if we already have those codes set up for the monthly premium amount, full premium, and employee portion not deducted?
How do we take the credit if we're taking it for the full premium? Is that what it was?
It's how do we take the health insurance credit if we have those codes set up for the monthly premium amount?
Yeah, so we would need to be able to substantiate that on a hourly basis, or at least on a weekly basis per employee. So if your medical code is set up on a monthly basis, say that you're just taking it on the first payroll of the month, or you're not even associating it with payroll, then you'll need to portion that out and be able to substantiate that in case of an audit. So for example, you could say if the employer portion is $1,000 per month and you just expense it once, right, when you get the bill, then you just take that, you divide it by the number of hours in a month or in a week, 2,080 divided by 52, right? So you get your 40 hours and you say, okay, it's 50, it's, here we have our, well, what would that be, 50 divided by 4, $12.50 an hour. So you just have to be able to show that that is an expense and be able to say, and be able to associate it with that particular class of employee. Good question.
All right. And from Cliff Harris: is there an easy way to track hours between the two sick leave codes for each employee so the 80 hours is not exceeded?
No, there's not an easy way. We can what you can do is you can set up the two separate leave codes. I set up one leave code with an 80-hour limit. You could set up the two leave codes, and you could manually verify that nobody goes over the two of them together. That would just be a manual process on your end. If you have a lot of employees, that can be kind of onerous. I don't know of any way, Gary, if you're on the call and still and know of a way that we could do this, or John Weinica, that we could limit it out with two, set one limit, like similar to like what we do in garnishments, where we have one limit for 2 leave codes. I'm all ears, but I don't know of any easy way.
All right. And next, it's sort of a question, sort of a comment. On the leave code and accrual usage, we've got it set up as an amount. I think we may want to set it up as hours. Is that correct? Or is that outlined clearly on the PDF?
It's outlined on the PDF, but which is set up as an amount? On the
The
leave.
leave code accrual and usage was set up as an amount instead of hours on the
Oh,
example.
oh, okay. I probably made that mistake. Thank you for that. We would want to set that up as hours, not as we would definitely set it up as hours and not as an amount. So um, if I set that up as an $80 amount instead of an 80 hour, then that was my mistake. Thank you. I'll correct that before I send the PDF out.
All right, and a question from Alan. The setup would not apply to daily aggregate limits to the earnings, right? It only applies to the limits of liability code, which is driving the recognition of the credit receivable. Same when they were setting it up, they couldn't find a method of limiting the earnings and are managing that with a separate custom report.
That's correct. You can limit the earnings. There are ways to limit earnings, which require additional setup further than what I was saying in the basic. The earnings codes do not need to be limited by law. You can pay your employees whatever you want. It's the credit that is limited, just like you said in the question. The one thing that I had done in there is if you're paying the 2/3 exactly, then you can put that in on, and so that it defaults in on the time card entry, just 0.6667, and that will default in correctly. So you can limit the earnings with the basic setup if you're doing an exact 2/3, but you can't limit it to the $200 per day easily. There is things you can do to make that happen. Custom report is one way, manual verification is another way, and then we have some ideas for on routines.
All right, and next question is the health liability credit based on the that incurred during the new law's term or only related to that incurred for those who go on leave?
It says that it's related to the it's related to the hours worked that are getting paid, or not worked, the hours being paid. So like if you're paying them for 40 hours for last week, then it would be the health insurance related to that time only. Did I answer that question correctly?
I think so.
Here's a question from Monty Anderson at Tapney. He says, how do we go camping during the coronavirus? Well, I don't know, Monty, but I bet it's going to be intense. Let's see here. Is there CPE credit for this? I'm sorry, Michael. There isn't CPE credit for this. Besides, I think I saw you falling asleep, and so you didn't hit that attendance thing. No, I'm kidding. There is no CPE for this. David Morgan, does your custom routine count for the 2/3 earnings? Keep in mind the minimum wage. Yes, we are working on that. Our custom routine takes into account the 2/3 on the liability side for sure. if we don't, but we do want to be able to allow all of you guys to set it up with basic setup without customer routine, and that means that you have to, there is some manual checks that you have to do in order to stay compliant. Any other good ones coming through here, Jenna? David Morgan wonders if there's jelly beans provided as well with the customer routine. We might be able to make a special exception for you, David.
There is a question out. Can you run through the accounting concepts of the setup? Is the employee earning going to an expense or to a receivable account? So just kind of quick recap on that.
Sure. Can you still see my whiteboard here?
I can, yes.
Okay, great. So that means everybody can. Yeah, maybe it would be best if I talk about a few different accounts here. So let's when we run a payroll, a standard payroll, let's just say somebody gets paid $1,000. So we'll do our example from above where an employee is getting paid a gross payroll of $1,000, and that there's deductions out of their check for a total of 200. So their net pay is 800. Then we have an additional employer liability here of $100. So that's the scenario that we're going to try to run through here. And for our purposes here, the whole $1,000 is being paid out under the sick leave act. So this is all going to get reimbursed. And the hundred not 100K, sorry, $100. The $100 is other federal taxes that are not the FICA, et cetera, that are not subject, but workers' compensation and medical and whatever else. So what would happen here on our T-charts? First of all, we know that the employee is getting a check. Employee is getting a check, so it's going to come out of our cash account. So it's going to be some kind of current liability cash account, and they're going to get it's going to be an $800 credit to our cash account. Second of all, let's just say that this is a office worker, and so there's going to be some kind of 600 account, right? Indirect wages, we'd call it. So this is cash, and this is indirect labor. And this our indirect labor is going to get our full $1,100 dollar credit. So the $1,000 gross plus the $100 of federal of employer burden. Okay. Then typically we would have another account up on the balance sheet here, and this would be a series of 200 accounts, but this would be all of our payroll liability accounts. And our payroll liability accounts are, going to get essentially the full $300 in a normal situation. This is no different. We're going to have our full $300 that we need to pay to all of our people. That's the $200, the $200 from here plus the $100 from here that we owe to various agencies, et cetera. So this would be a typical payroll. Now with our extra earn code, because the $1,000 was paid out under our sick leave earn code, and we're going to say that of this $100, $50 was other things, and $50 was medical expense, employer medical expense. Then we have a couple things that we can do. First of all, we're able to track a current liability when we run this payroll through the customer routine or through the standard basic payroll. In my case, it was 120. I put this as COVID reimbursable. It was a current asset. And so we're able to take the full $1,000 plus the $50, and we're going to say that that's a current asset, $1,050. And the law requires that then down on our P&L account, so this is all of our balance sheet accounts here, and then all of our P&L accounts, we have to, since they deny the double benefit, we're going to say, well, we're going to count this down in our 900 accounts miscellaneous income. and this will, so that it will increase our net income for taxes and GAAP by 1,050. So that's when we post payroll, that's what happens. Now when we go to pay our employer taxes for this one person, now obviously we have a bigger reimbursement, but basically that's our first transaction. Our second transaction is we're going to pay via EFTPS our payroll taxes. So we're going to credit that 300 there, right? And we're also going to get our money back here. So we have to reduce our asset by 1,050, which means that in this case, the IRS is going to be giving us a check. What just happened there? 1,050 minus 300, $750 check. And we're going to be getting a check that's going to increase, within 2 weeks, they've promised a check of $750 into our cash account. So that would be when we pay or go to and file our EFTPS. Generally speaking, what would actually happen is that your net payroll from all of your working employees would be greater than the credit you would be able to confirm. So it would just be a smaller debit, a smaller credit on your cash account. Hopefully that explains everything. Any other questions?
Another accounting question from Ivy. It's why are we setting up the liability as an income? Shouldn't it be a negative expense?
Well, seeing as Ivy Schlegel's a CPA and I'm not, the question might actually need to be an income. It might actually be a negative expense. I just felt like it needed to go into the 900s, and maybe it needs to be a reduction of miscellaneous expense rather than an increase of miscellaneous income, but it needs to definitely go in. I feel like it needs to go into other incomes. That can be set up when you set up your payroll, when you set up the liability type on your PR department master. And I don't know that it matters. For the IRS, it doesn't matter. All they care about is that you track it towards your net income. And it's not a negative labor expense because we don't want to skew our operational reports for management. This has nothing to do with management. This doesn't have to do, your jobs shouldn't be affected. If you have departments and you're looking at variance reports on your departments, et cetera, for management purposes, if they're getting paid, they're getting paid, and then we just take it as a credit down below. That is my opinion and not anything to do with GAAP, et cetera. We certainly could take this as a negative payroll expense directly where they hit it. So in other words, instead of putting it here, we could just put it here, 1,050, and we'd only have a $50 expense there. But I feel like splitting that out so we can see it more clearly would be better for management reporting. It certainly doesn't matter for GAAP or tax, I don't believe. Okay, any other questions, Jenna?
Another question that came up from Sean that we did not touch on earlier was this is something we may want to double check and put something out on, is it looks like the payments may be subject possibly to Medicare taxes because only the 6.2% FICA is referenced directly under the act.
Yeah, so that has been a matter of contention. And I certainly believe that we'll get very clear guidance today or tomorrow on this. This is the only thing that the IRS has said so far. Employers face no payroll tax liability. The act itself is unclear what that means. So we've taken that to be both the 6.2 and the 1.45. As we learn more, I mean, and that's just the basis code setup. So it might be, we expect guidance from them very shortly on that. Certainly, if any of you guys find specific guidance on that before I send anything out, please send it over. My interpretation is that they're going to, or my hunch is that they're going to actually give us more credits than we expect, including like FUTA, et cetera. But at this point, this is all we know for sure from the IRS. Employers face no payroll tax liability. Good question, certainly important. And this is going to, if it's only the employer side and not the employee side, it is going to wreak havoc with our W-2 reconciliation process at the end of this year. But I guess we'll pull our pair out on January 31st, 2021 because of this later.
And another question from Ivy, does the employer have the option of paying co-pays and then get reimbursed?
Paying the co-pays and then getting reimbursed.
Mm-hmm.
In other words, changing their health care plan because of this law. I would say that I'm unqualified to answer whether or not you can change your healthcare plan in the middle of the year, but I would guess that if you did, you would not be able to change it only for the affected employees. You would also have to change it for all employees. So you would have to be paying those co-pays and the employee portion for all of your employees, not just the ones that are falling under the Sick and the Paid Leave Act. So I would be careful there, and I would certainly only do that after talking to your healthcare provider and agent.
And then a question from Josh. He's asking, for states that have existing sick leave laws, do the federal or state sick leave supersede each other? Do the employees have to use one before the other? Is there any direction, or does the law have any direction on it?
There is no direction currently yet on specifically how the state laws interact with the new federal law. There is a lot of direction on how the existing FMLA, so that's the part that the 12 weeks off that you have to give the employee their job back, how that interacts with individual states, and we've had plenty of time to go through that. I would guess that the way that this interacts would be similar. However, the new law does say that in both cases, the 2 weeks of sick plus the additional 10 weeks of family leave does need to come before other things are taken. So if you guys are providing 4 weeks paid vacation, that they can take this sick or this family leave first and still have that available to them at the end. That means, it may be that this will come out as superseding the state's paid leave as well, but that is unknown. Certainly in Washington state, we get paid family medical leave directly from the state and not from our employer. And so it's very unclear as to whether those can be taken simultaneously and how that works. We expect individual states to have individual response times as far as to how those things play, and you guys will need to pay close attention to your particular states.
Then a question from Chrissy says, does this impact companies with less than 50 employees? If it doesn't, can employers with less than 50 employees still qualify for tax credits if they implement a policy that abides by the rules set by the government for the new law?
So the law does exempt. It allows people with less than 50 employees to exempt themselves. So they can say, we choose not to follow this. If you do not pay out the sick leave, and you do not pay out the federal expanded family leave, then you do not get the reimbursement. So you can choose to do that. Silvertruck Systems has 16 employees. We're choosing to follow this and to provide this to all of our employees. And we don't have to, but we could just ignore it essentially. The only reason that you would ignore it if you're less than 50 employees is if it's an administrative burden, as far as I can tell, because the full amounts get refunded to you.
And what's the advantages to setting up this way instead of just using the PTO earn type?
Because the PTO earn type would interfere with your existing PTO in a number of ways. If you already have existing PTO, then it would reduce the amount that they have available to them, which is explicitly prohibited by this law. They have to use this first and then use the PTO. Second, the accounting for it is weird. Oftentimes your PTO accrues as a liability, and then when you use it, it comes off that liability and not as an expense. We need to account for this separately. Third, there's three really very separate ways that we're tracking for this: the COVID employee, COVID family, and the leave, the COVID extension of the family leave, and they all have separate rules. And if we want to track them correctly in the system and track them accounting wise in the system, we need to track them separately as 3 separate earn codes, 3 separate liability types, and 2 separate leave codes. Anything else? Let's see, I see one from Bonnie. If an employee lives with someone who has been advised by a health provider to quarantine, can we take the full pay credit, or would they fall under the caretaker leave with the $200 day limit? If they live with someone who has been advised, that would fall under number 4, which is, let's see if I have it written down on here, which is they're caring for an individual who falls under one of the 3 above. So they would fall under the 2/3 and the $200 per day limit. If they have been advised to quarantine, then they would fall under Group A, the COVID-19 employee. That's my reading.
And would that even apply to like a roommate situation, or does it specify family only, or if you had a roommate that got advised to quarantine, would that impact you as well?
Well, it says that you have to be caring for the individual. So I guess we'll leave that to your interpretation. If it was my son or my daughter, I would likely be caring for them. If it was my roommate, I would likely be trying to ignore them and their mechanical keyboard. So I don't know. Anything else before we sign off? Any other questions? Here's a question from Jackie. If an employee is receiving unemployment benefits, are they eligible for any of these benefits? If they're receiving these benefits, they are not unemployed. They are employed. That's my understanding. I hope that the Department of Labor will clarify that. There has been some rumors, I guess it was more than a rumor right at the beginning. They said there might be the ability to like top off your wages if you're getting this 2/3 under this, top off your wages with some of the state provided coverage. Certainly, there's some clarification needed there, both federally and state level. Okay.
We did have another question come in from Chris. He was asking if we know how this would, if we have folks that are using ADP integrations and smart compliance tax, would this integrate? Would the custom routines that we have set up integrate?
The custom routines that we have are not changing anything substantially. So as long as the integrations you have with ADP, Paychex, et cetera, are using standard, looking at the payroll accumulations, or looking at standard earnings codes, standard liabilities, yes, it would integrate just fine. We have a very we believe in a light touch. When we do a routine, we change as little as possible. We change existing routines. We use existing routines, and especially now, whenever we've been in touch with Gary Gilmore over at Viewpoint and the other product team there to make sure that we're doing things correctly. There should be no additional complication with this. Now, of course, we are setting up new earn codes and we are setting up new liability codes, and those will need to be considered when considering your various integrations. That is both upstream, like time card apps, and downstream, ADP or other providers like 401k uploads, etc. Somebody said, remember to consult with your attorneys. I agree. Okay, well, the I guess we can wrap up. Feel free and contact us or come onto our website here, silvertrek.net, and fill out your information if you would like to have us give you a call and talk about your specific setup. We'd be more than happy to do that. I hope this was informative. We'll get together, put our heads together here, finish up my PDF, and make sure there's no typos. Get that that one you guys already caught, the amount versus the hours on the leave code, and get that sent out. I sure appreciate all you guys coming today, and I hope that we can all help our employees weather the next few weeks as we hunker down. All right, stay safe, good luck, and we'll hopefully be talking to some of you soon.